In this video, I'm going to show you how to trade stock markets and how to place trade, exit trade, how to evaluate trade using technical and fundamental analysis. Let's get started. Stock markets is a place where companies can raise money to make their business bigger and better. Companies raise money by selling shares of stocks to investors. At the same time, the stock market gives investors an opportunity to invest in these companies and benefit from any profit they make. The stock market can also be called the capital or security market, as it encompasses the stock exchange, the branches, and the stockbroker. An organized security markets require a security exchange, a security commission, or other regulating agency and intermediaries, such as dealers, brokers, and security analysts. The intermediaries receive their fees from issuers or investors to whom they provide a service. The stock market is usually funded through the fees paid by issuers and investors. Even the expenses of the Security Commission may be partially paid for by registration fee, rather than being a major burden on the government budget. The stock market embraces trading in both new issues and old issues of stocks. Securities are primarily of two types. We have the debt securities and equity securities. The debt securities include the federal government development stocks, industrial loan, preference stocks, and bonds. While the equity securities mainly concern ordinary shares, and which impose higher liabilities on holder portfolio investment in the capital markets, is the acquisition of financial assets, which include stock, bonds, deposit, and currency from one country to another. It is a form of investment that attempt to achieve a mission of income and capital growth. The stock market is where the shares of various firms are traded. A trading in shares may take place in two different forms in stock markets. When the issuing firms sell the shares to investors, the transaction is said to have taken place in the primary market or the primary section. But when already issued shares of firms are traded among investors, the transaction is said to have taken place in the secondary market or the secondary section. The major participants in the stock markets include the governments, the quoted or listed companies, the stockbrokers, the central bank, the stock exchange, banking and non-banking financial institutions, Security and Exchange Commission, the stockbroker. The stockbrokers is agents who purchase and sell securities on a stock exchange market on behalf of clients and receive remuneration for the service in form of a commission. Stockholders. Stockholders are individuals, businesses, and groups owning stocks in a corporation. A share is an equity security. Its owners own one part of the capital of the company which has issued the shares in question. Shares enable the shareholders the right to take part in the decision making in the company. If the letters operate with profits, the owners of shares may receive dividends. The amount of dividend is decided upon by the shareholders at the general meetings of the shareholders. Dividends represent that part of a profit of a firm which is distributed to the shareholders. The company may declare dividends at the shareholder annual general meeting. Shareholders will get dividends in proportion to their shareholding in the company. Dividends may be in the form of cash or bonus shares. A bonus shares is a free shares of stocks given to current shareholders in a company based upon the numbers of shares that the shareholders already own. The issuing of bonus shares increase the numbers of shares issued and owned. It does not increase the value of the company. There are two major types of shares. We have the ordinary shares and the preference shares. The ordinary shares, which entitle the shareholders to shares in the earnings of the companies as and when they occur, and to vote at the company annual general meeting and other official meetings. The preference shares, which entitle the shareholders to a fixed periodic income, but generally do not give him or her any voting rights. Bond. Bond is a debt investment in which an investor loan money to an entity, typically corporation or government, which borrow the fund for a defined period of time at a variable or fixed interest rate. Bonds are used by companies, municipalities, states, and sovereign governments to raise money and finance a variety of projects and activities. The owners of bonds are debt holders or creditors of the issuers. When companies or other entities need to raise money to finance new projects, maintain ongoing operation, or refinance existing other debts, they may issue bonds directly to investors instead of obtaining loan from a bank. Bond is a form of loan. The holder of the bond is the lender. The issuer of the bond is the borrower. The coupon is the interest. Bond provide the borrowers with external funds to finance long-term investment, or in the case of government bond, to finance current expenditure. Dealers who do trade on their own account, but whose primary motive is to benefit from trading rather than from holding securities. Dealers obtain their return from the difference between the price at which they buy and sell security over a short interval of time. Bonds and stocks are both securities, but the major difference between the two is that stockholders has an equity stake in the company. They are owners. Bondholders has a creditor stakes in the companies. They are lenders. Another difference is that bond usually have a defined time or maturity after which the bond is redeemed, whereas stocks may be outstanding indefinitely. Stock valuation. In order to make investment decision, investors conduct valuation of stocks. There are two approaches to what information is useful in the selection of stocks and timing of the purchase of stocks. We have the fundamental analysis and technical analysis. The fundamental analysis is one of the methods of valuing stocks, which involve the analysis of company operation to assess its economic prospects. It is based on fundamental financial characteristics, e.g., earnings about the company. The analysis is based on financial statements of a company in order to investigate the earning, the cash flow, the profitability, and financial leverage. The fundamental analysis is concerned with the analysis of the major product line, the economic outlook of the products, and the industry in which the company operates. The technical analysis is a forecasting method for asset price based solely on information about the past price. Why should I invest in shares? There are several objectives and reasons why people invest in shares. These reasons are different for each person, depending on life circumstances, age, and specific needs. People invest in shares to obtain capital growth. Others invest to obtain a regular income such as dividends. We may invest to obtain both an income and capital growth. Capital growth occurs when you buy a stock or share worth $10 today and sell the same shares for $30 in the future. So the difference between the purchase and the selling price is the capital growth, which is the $20. There are three important terms to know regarding ordinary shares. We have the authorized shares. The authorized shares are the total amount of ordinary shares that may be issued. The issued shares. The issued shares are shares that have actually been issued. Outstanding shares. Outstanding shares are issued shares that are still in the marketplace. The only times an issued shares will not be in the marketplace is if the companies repurchase its own shares. Welcome to Nigeria Stock Market's online trading. In this section, I'm going to teach you how to trade Nigeria shares on daily basis and withdraw your profits. These are companies, their stocks are listed in the floors of Nigeria Stock Exchange. We have the Access Bank, the Academy, the Afribond, and so many others. The Beja, the CAP, the Champion, Dangote Cement, Dangote Flour, Dangote Sugar, Dunlop, and so many other ones. And we also have the state bond and federal government bonds. These are bonds, federal government bonds. These are federal government bonds. These are federal government bonds. So these are the stocks. These are companies. Their stocks are listed in the floor of Nigeria Stock Exchange and various companies' boards. So you can buy and sell the stocks on daily basis. The Nigeria stock market open by 10:15 in the morning and closes by 2:30. So you can place trade within this period of time. And if you make profits, you can withdraw. Or if you don't want to withdraw, you can allow the trade to run for a couple of times. We also have here the previous close, last trade, quantity traded, previous close, last trade, quantity traded, day volume, opening price, close price, then the high price. The low price and price change. Then percentage change, or how the bid depth, or how the best bid, and offer depths, and so many others. The previous close is the price at which the market closed for the past, while the last trade is the current market price. When it's red, means the company lost for the day. When it's green, means the company gained for the day. When it's black, means no loss, no profits. Okay, let's see how this works. This company indicate red. The last trade is 0.86 kobo. The previous trade is 0.90 kobo. That means that the market opened at 90 kobo and closed at 86 kobo. Means they lost some fraction. So that's why this turned red. The Access Bank, the markets opened at 6 naira 80 kobo and closed for the day at 6 naira 95 kobo. So they make some fraction. That's why the Access Bank turned green. Then AfriPaint opened for 2 naira 35 kobo and closed for 2 naira 35 kobo. You see, it's constant, which is black, means no profits, no loss. So these are companies. There are many of them. Their stocks are listed in the floor of Nigeria Stock Exchange. So you can buy and sell shares online on daily basis with your phones and laptop. If you want to place order, come to order, click on submit new order. So we have two things here. We have the bond and the stocks. If I'm to trade company stocks, I will click on equity. Then symbol, select the companies you want to trade their stock. For example, if I'm to trade Access Bank, then I'll click on Access Bank. So Access Bank has come to board. Then the question is this: am I to buy or to sell? Click on this menu. Click on this. You see a drop down menu. Buy or sell. So I'm to buy. I'll click on buy. Then quantity of stocks. How many units of stocks you want to buy in Access Bank? For example, if I'm to buy 10 units, 10. Then markets. Click on market. So I'm placing on at the market price. Then come to take the last box. Then you see good for 10 days, good for 14 days, good for 7 days, good for a day. Then click on good for a day. Once I click on submit, my order will go through. If you come down to see, this is the equity order calculator. So consideration will have 69 naira 50 kobo. Commission is 94 kobo. Fees they charge me is 4 naira 46 kobo. Then estimated total is 74 naira 90 kobo. So once I click on submit, my order will go through. Means I've purchased Access Bank stock at the time I'm placing this trade. This is how you place order trading online. Then if you want to fund your account, you can transfer money from your bank account to your broker account. You can wire fund from your bank account to your broker account. Come to click fund account. So these are various banks you can use to fund your broker account. We have the Zenith Bank, the GT Bank, the First Bank, the Access Bank, Fidelity Bank, and the Wema Bank. So if I'm to fund through GT Bank, I'll click GT Bank. If you want to withdraw money from your account or fund your account, come to fund management. Then this is withdraw, fund, deposit fund, withdraw fund. So click on withdraw fund if you want to withdraw money from your broker account to your bank account. Then come to type the amount you want to withdraw here. If you are, if for instance, if it's 50,000 or 10,000 or 5,000, it depends on the amount you tend to withdraw from your broker account. Click take 5,000. So once you click submit, the money will drop to your bank account, which you use to open your broker account. If you want to view your stock, click on portfolio. So these are the stocks that
I played some times ago. Guinness, UBA, and Zenith Bank. Most of the stocks they have been losing for some while now.
Bull markets and bear markets. A bull market is a financial market of any kind in which prices are rising, while a bear market is a financial market of any kind in which prices are falling. Trading charts. A trading chart is a sequence of prices drawn over a certain time frames. There are 4 types of trading charts. We have the line charts, the bar charts, the candlestick, and Ikihashi. The vertical axis represent the price scale, and the horizontal axis represent the time scale. Investments is the employment of funds with the aims of getting return on it. In general terms, investment means the use of money with the aim of making more money. In finance, investment means the purchase of financial products or other items of value with an expectations of favorable future returns. There are 2 types of investments, which is the economic investments and financial investments. The economic investments means additions to the capital stocks of the society, and the capital stocks of the society is the goods which are used in the productions of other goods. The economic investment means the formation of new and productive capital in the form of new constructions and producer durable instruments such as plants and machinery. The term economic investment implies an increase in building, equipment, and inventory. Financial investments. Financial investments is the allocations of monetary resources to assets that are expected to yield some gains or return over a given period of time. Financial investments means an exchange of financial claims, such as shares. It involves a contract written on piece of paper, such as shares, debentures. People invest their funds in shares, debenture, national savings certificates, fixed deposits, life insurance policy, and provident fund. Investment portfolio. Portfolio means a combined holding of many kinds of financial securities, such as shares, debenture, government bonds, and other financial assets. The term investment portfolios refers to the various assets of an investor, which are to be considered as a unit. It is not necessarily a combination of unrelated assets, but a carefully blended asset combinations within a unified framework. Making a portfolio means putting one eggs in different baskets with varying elements of risk and returns. Portfolio means a combination of various instruments of securities. It can also be viewed as a combination of various instruments with varying risk return characteristics. Portfolio management. Portfolio management has to do with portfolio planning, selections, constructions, review, and evaluations of securities. It can also be viewed as the strengths, weakness, opportunities, and threats. Commodity market. Commodity may be defined as the products or material or any physical substance like food grains, processed products, agro-based products, metal or currencies, which investors can trade in the commodity markets. One of the characteristics of a commodity is that its price is determined as the function of its market as a whole. Commodity markets is a market where various commodities and derivative products are traded. Most commodity markets across the world trade in agricultural products and other raw materials such as sugar, maize, cotton, cocoa, coffee, oil palm products. Forward and future contracts have the same functions. Both types of contracts allow people to buy or sell a specific type of asset at a specific time in the future. Forward contracts are private agreements between two parties that are not outrageous in their stated terms and conditions. Forward contracts have the following characteristics. Commercial banks provide forward contracts. Forward contracts are not standardized. These characteristics indicate that you can have forward contracts with any amount of money. Forward contracts implies an obligation to buy or sell currency at a specified exchange rate, at a specified time, and at a given amount, as indicated in the contract. Forward contracts trade in over-the-counter markets. When a forward contract expires, the transaction is settled in one of the following two ways. The first way is through a process known as delivery. Under this type of settlement, the party that is long the forward contract position will pay the party that is short the position. When the asset is delivered, the transaction is finalized. The second way is a process known as cash settlements. Option represents a contract that gives its buyer the rights, but not the obligation, to buy or sell the underlying assets, such as stock, currency, pair, commodity, at a specific price before a certain date. Option is a contract with a strictly defined terms and properties. There are two types of options: the call option and the put option. The call option is similar to holding a long position in a currency pair, commodity, while the put option is similar to holding a short position in a currency pair, commodity. When trading option, individuals who purchase option is known as holder, while individuals who sell option is known as writer. The total price of an option is known as premium, while the time remaining before the maturity date is known as the time value. The spot market. The spot market is also known as a cash or physical market. It is a financial market on which commodity or financial instruments are sold for cash and delivered immediately. The spot market can be an organized market, an exchange, or over-the-counter market. The opposite of the physical market is the future market, where the settlements and deliveries are due at a later date. Candlestick is the style of bar charts, used primarily to describe price movements of a security, derivative, and currency over time. Is a combination of line chart and the bar chart. In that, each bar represents range of price movements over a given time interval. It is most often used in technical analysis of equities and currency price pattern. It appears superficially similar to error bars, but are unrelated. Candlesticks are usually composed of the body, black or white, and upper and lower shadow. The area between the open and the close is called the real body. Price excursion above and below the real body is called the wick, shadow, or tail. The wick illustrates the highest and the lowest traded price of a security during the time interval represented. The boarding illustrates the opening and the closing trade. Candlesticks are visual aids for decision making in stock, forex, commodities, and option trade. Candlesticks are formed with the help of opening, closing, high and low traded price of the day. If the opening price of the security is higher than the closing price, black or red candlestick is formed with the opening price at the top and the closing price at the bottom. But when the opening price is lower than the closing price, white or green candlestick is formed with the opening price at the bottom and the closing price at the top. Black or red candlestick is used to represent bearish candle. White or green candlestick is used to represent bullish candle. Dodging. Dodging is formed when the opening and closing price are virtually the same. Dragonfly dodging. Dragonfly dodging is formed when the opening and closing price are the highest of the day. If it has a longer lower shadow, it signals more bullish trade. If it appears at market bottom, it's a reversal signal. Gravestone dodging is formed when the opening and closing price are the lowest of the day. If it has a longer upper shadow, it signals more bearish trade. If it appears at market top, it's a reversal signal. Long lower shadow. Long lower shadow is a candlestick with a length of 2/3 or more of the total range of the candlestick. It's a bullish trade when it appears around price support level. Long upper shadow. Long upper shadow is a candlestick with a length of 2/3 or more of the total range of the candlestick. It's a bullish trade when it appears around price resistance level. Bullish RMA. Bullish RMA is a bullish trade when preceded by a down trade. Bullish RMA cross. Bullish RMA cross is a reversal signal when it appears at market bottom. Bearish RMA is a bearish trade when preceded by an up trade. Bearish RMA cross is a reversal signal when it appears at market top. Engulfing bearish line. Engulfing bearish line is a reversal signal when it appears at market top. Evening Doji star and evening star is a reversal signal when it appears at market top. Morning Doji star and morning star is a reversal signal when it appears at market bottom.